I think what the Fed told us yesterday is to care less about them. You know, we've been obsessing over them for
Did they say that? Because they also said they're going to have a press conference every meeting, which to me says, care more about me.
No, I think what they're going to try to do is communicate in more plain-spoken language. What you saw yesterday, I think, from Powell was, it became Powell's Fed yesterday. They're going to communicate differently. They're going to communicate in a more plain-spoken manner. But in terms of what's going on with the economy, what they acknowledged was, look, this is no longer an economy that's driven by the Fed. It's one that's driven by growth and earnings. Focus there.
If one of your clients or shareholders called you up and said, Steve, that's my voice for your client, Steve, why do I care about the ECB? What would you say?
I think the reason you care about the ECB is because they've bought all the bonds you can buy in Europe. And so they've had to go in and buy treasuries as well. That's one of the reasons why the long end of our curve has been as low and yields have been as low. And so as they do pull back, you could see the kind of 10-year move up a little bit.
So they are, correct me if I'm wrong, please. I mean, basically, as I would say it, if I was explaining to somebody who doesn't watch CNBC every day, as I would say is, they're basically doing, you heard that quantitative easing thing a lot a couple of years ago here in the States. They're basically 3 or 4 years behind us. They're still doing that to stimulate the economy.
That's right. And they're doing it not only by buying their bonds, but by buying ours, which keeps our rates lower than they would be otherwise.
They're helping us.
They're helping us, but they're also keeping that yield curve flatter. And so as they slow down those purchases or stop, you could see the yield curve actually steepen a little bit, which would be good for financial assets.
So if they pull back or stop on that QE, does that bode ill for European or U.S. equities? Because now the stimulus is largely stopped from here and from there.
I think, again, what the Fed told us yesterday and what we've been claiming for a while at Federated is we've hit exit velocity in the United States. We don't need central banks to be the engine anymore. They're just a steering wheel.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.